Hey everyone, let me maximize this over here so I can see everyone's comments. I hope everyone's doing well. It's been a bit since we were able to jump on and do a live stream, but as you'll see, we've scheduled them for more frequently coming up this week, and hopefully that's going to be a schedule we keep. Some follow up to the week, systematic discussion on Sunday evening, and then a couple of streams during the week to do some review of systems and how those systems perform during the trading day, after the trade is over. So that's the plan for the near future, at least, and we'll take feedback from folks and see what would be most useful in terms of thinking about and deploying systems to their trading. So let's jump in. We're going to also make an effort to keep these focused and I don't want to say short, but 15 to 20-minute streams, and encourage folks to participate as much as possible so that we can better understand, what would be most useful for folks to know about the way that we deploy systems in Systems Academy. All right, so let me share my screen. And of course, as always, if anyone has any questions, you can just drop them in the chat and I'll put those up on the screen and we can discuss those in addition to the intended topic for the evening. So let me share my screen. All right, here we are. So this is Friday's trade. I'll turn that off. This is the day type algorithm you see here, which we do not need right now. All right, we can turn this off. So what I wanted to talk about, because it's been a bit since we spoke just explicitly about, we'll get to this question in a minute. It's been a while since we discussed explicitly the kind of first principles of attempting to develop a system, and the most important starting point is obviously whether it's going to be a trend resumption or a mean reversion system. Now, after that, there are myriad second variables, but the first, whether it's mean reversion or trend resumption, should be the starting point. So, for example, someone who's going to come into this day and with the intention of trading trend resumption, they would need to have a good sense of whether they're trading high ones, high twos, whether they are buying climactic second legs in trading range, how they were going to be managing trend resumption, because uh, there are, yeah, so like as we see here, this is bottom of a trading range, climactic outside bar, buying the lows of these is resuming this trend and also buying off of the low of the trading range. So it's a mean reversion, but it's also mean reversion in the direction of this very tight bull leg. So there's lots of nuance that comes into it. This is where the importance of understanding the system that you're developing and having a systematic approach really comes into play, because there are so many ways of trading price action. There's so many setups. I mean, for those of you who have read Al's books, I mean, going through those could leave you with an almost infinite number of things to start with, and all of those are entirely viable trading strategies. And we discuss the books often in Systems Academy, but starting from that kind of kaleidoscopic perspective can be difficult, or can put traders in a difficult perspective, because there are so many options on every bar. There is a trade literally on every bar, and if there is, then how do we prioritize? And so that's really what the system does is it helps you prioritize the trades that you'll be taking, throughout the day until your system has taught you all of the second order benefits of having that system. So here, let me pull this question up on the screen. If we're unable to test the bottom of a climax bull bar, would you say the bull trend is stronger? Um, so there are a number of kind of implied questions in there that you have to answer first. How are you defining a climax? Does if it's just a single bar, climactic bar like this, the breakout code that we use in Systems Academy flags this bar 24 as a climax bar based on the measurements, the mathematical formula we use for defining climax. But your definition of climax could be a climactic bar at the end of a third leg, and in that case, this might be your climax. So it first really depends on that, but we can deal with both of these examples. They're both useful. So climactic bar at the end of a parabolic wedge, will typically get retested because it's unlikely to start an even stronger bull trend at the end of a parabolic wedge breaking out above a wedge. Right, that's very unlikely. Whereas here, this climax, at least according to the way that we define it with this paint part algorithm, this gets retested quickly. And so often you'll see these kinds of climax bars get retested relatively soon after they form. If they don't get retested and they get follow through, then it typically means you're beginning a stronger market cycle. And you can look for pullbacks at different other logical price action levels. So, that would become, we can find an example of one that did get continuation and look at how that behaved. So this was a climax bar that obviously failed. This is not a climax bar. To be fair, they don't often get follow through, so it may be a fool's errand looking for this. This one did not get follow. So this is a climax bar, this cyan color. Didn't get follow through, but also generated the outside bar, another inside bar. So outside, inside, and then trend resumption from there. And then that came back down later to retest basically this range here of that pullback. So that's and then when that finally failed later, that area became resistant. So this was a logical place to retest because this was not a high probability breakout location. I mean, there are other context factors which do make it more likely to get a retest and close of the opening gap. But without considering all the other context stuff, which we're not really dealing with this evening, this was not a high probability breakout. And so the retest here was of this climax bar, which likely should have resulted in trading range behavior. All other things being equal, not accounting for the previous day's bull trend, retest of all of these different previous day levels and context that suggest a retest higher is actually more likely. But let's go back to today. So if a climax bar, or Friday rather, so if a climax bar gets breakout and follow through, then I would say the bull trend is stronger. But the likewise, would the bull case be stronger if are not selling above outside down bar? So outside, like here, bar 15. You can just let me know if this is what you mean. Selling above here. Would the bull case be stronger if we are not selling above the outside down bar? Just confirm that that's what you're referring to. Okay. Would the bull case be stronger if there's not selling above the outside down bar? I see what you mean. Okay. Outside bars are incredibly context dependent, which is one of the reasons why they require a lot of study to be able to trade the outside bar properly. Um, so again, they are more context dependent than a lot of other things. I mean, obviously everything is context dependent, but like this outside down bar, uh, we got selling above it, which made sense. We got selling above this outside down bar. We haven't been back to test this outside down bar, but most outside bars, if they have a stronger directional bias, will get retested. Um, we've seen folks in Systems Academy develop entire systems around breakouts from outside bars because that is obviously the low probability event. This is a breakout of a expanding triangle on a lower time frame. So this breakout and follow through is low probability. But then, of course, it's also attempting to here this day let out the trapped sellers, from the fades here and here, who are all now trapped, and none of them got out. So then covering again. Now, the first principle, though, of attempting to develop a system around either trend resumption or mean reversion is it has to be your starting point. So for folks, I don't know whether you all are thinking systematically or if you are attempting to just sit down and trade fully discretionarily. Uh, the method for determining which setups, if you want to think about it in terms of setups, which setup you trade is really defining whether it's going to be a mean reversion or trend resumption. And often, the most useful thing is to first develop the trend resumption, which is what we suggest in Systems Academy, starting with that, because it is the highest probability system or signal in price action. And by doing that, you also, by definition, uh, develop your mean reversion strategy as well, and potentially full system around that. So, for example, someone who's developing a trend resumption system who does see this bull climax bar and understands that it's going to get pullback, but that this is a sell climax to previous day. You know, the uh, the pullback at the end of the small pullback bull trend from Thursday, and that this is a sell climax to test these pullback levels, may in fact take these pullback buys. But what happens after two legs up? Right, you've had a big sell climax and then two legs up. Yeah, are the odds a big bull day? Or are the odds some form of trading range developing between this bad sell signal bar here and this bad buy signal bar, which got two legs up? It leaves us with a much higher probability that we're going to be looking at some variation of a trading range day. And if that's the case, then having a mean reversion system as a byproduct of developing a trend resumption system will be very useful. So understanding which system is in play at all times is second to first developing the trend resumption system. But for those of you who are trading discretionary, do you have I'd love to know whether you have a favored system that you've developed around a first principle of price action for trading trend resumption. Whether that's a high one, high two, um, just straight momentum buying, whether you're trading context and fading with limit orders at places where you believe buyers or sellers are trapped. Anyone who wants to, excuse me, volunteer a strategy or system that you're developing, drop it in the comments. X, what's going on? I don't know, is this a Marvin Gaye thing or is this a existential question? I'll go with Marvin Gaye, and I agree. That was a fantastic album. So the I knew it. There you go. That is what I will be doing after this before I go to sleep. So then let's think about this as so we were talking about this being two legs up. Yes, the catalog is deep, that's for sure. So if you go back through and you mark all of your outside bars, because actually, if you just have something that marks outside bars for you and you track those, those will give you some really great context for understanding what's happening on the day. So if you're getting, failed breakouts from outside bars, that, resume the trend, like here, outside bar, pullback, trend resumption, then typically you're going to be able to use limit orders to trade at these levels. You can fade these, fade here. So when you have a trend resumption system that's getting you into these trades, then once those market cycles conclude, all of the secondary events that happened, right? So I would be using my whiteboard, but for some reason the pen is being really finicky right now. So sadly, I can't actually see the cursor when I try to write. So it makes writing like writing in the dark. It's really uh, it would be awful for you all. So I'll make sure that that's resolved by tomorrow. Okay. So that being said, if you have a trend resumption system and you've been trading these moves, then uh, closely monitoring the price action throughout and understanding the events and responses that have happened, right? So breakout, think about it in terms of event and response. 24 is a climactic breakout. They got an inside bar pullback and got a breakout, followed by an outside bar pullback. So ended that spike. So this was all one bull leg spike, ended with an outside bar. Hey, carpet. And then the pullback of the after the outside bar resumed the trend. So at each of these levels, the event and response gives you information about what the price action should be that develops afterwards. And as a result, tells you whether you should be trading your trend resumption system or your mean reversion system. So if you were monitoring all of these and you started getting understanding you were getting a two-leg pullback in what is likely going to be a trading range day after the sell-off to test the climactic sell-off to test previous day pullback levels, then your first pullback from here is expected to fail. And when you get a strong well, it's not a great sell signal bar, but when you get a strong breakout from a bad inside bar sell signal, then also you have basically mean reversion trades that you've generated throughout here. So anyone who wants to volunteer the systems that they're trading now, welcome to drop them in the chat. And we can talk about how you might use any variation of trend resumption inside of a trading range day, because obviously these are your most common days and end up being the most problematic for most traders because trend resumption systems get so easily thwarted, and understanding the context surrounding the way that your system behaves becomes so important to managing them profitably. Um, while I wait for folks to drop something in the comments, I'll actually share something that one of the SA2 students said last week. He's been doing some deep study of not just his signals that his system is generating, but uh, he's developing all the calibrated expectations around the signal. So calibrated expectations being, if the signal succeeds, what should I be looking for in terms of measured moves, and also based on the way the signal manifests, right? So if you're trading breakout and follow through, is it in a first, second, third leg? What is the size of the signal bar? What is the size of the follow through bar? Which side of the EMA is it on? Is it crossing the EMA? Like there's a myriad things that you would want to be studying in order to better understand the system. But in studying all of those things and collecting the data on them, the depth of understanding that he's acquired of price action in general has transformed the way that he's conducting the study. So I don't know how many of you actually remember when Ali posted his "How to Become a Professional Price Action Trader," the article on Al's website, but we recommend it highly. It's a fantastic read. It's thorough, as you may expect, and it goes through every one of the steps that you would want to take at every stage of your learning journey, and it has that kind of spiral, and yeah, it's a spiral that circles out, and that's really what he's describing because the uh, it's iterative, but it's also self-reinforcing. So at each rotation across the spiral, when you realize something new or discover something new about your system, it reinforces the first principles of the price action that you are using to base the system on, and also the price action in which that signal occurs. So it makes you better at counting legs. It makes you better at managing positions. I mean, the effects are too many to count. So here, let's put this up on screen here. Limit buy below prior significant swing lows in lower third of trading range. Nice. And so when you say significant swing, so then I guess this would be more. These are all swing positions then, because like one of the interesting things that your statement actually translates into is like I love taking those trades by the bar, right? So like if you look at the one of the signals that the system generates for me, the breakout and follow through against a position is true for any trading range. It's true of a bar and it's true of a trading range on the daily time frame. So like this is a trading range bar. So if you got a breakout and follow through, you would anticipate that this is no longer, uh, you know, that on a lower time frame you're getting a breakout and follow through, and that you would also there are some calibrated expectations that you can bring into this. Those levels will also get retested. So stop losses at a measured move. Uh, when I'm trading these, it's interesting. I don't know if you, Carpet, if you've ever looked at it. I usually use two times the measured move because at a measured move, you'll often get a bounce, and if you buy the measured move, you can usually get out break even. Not all the time, but it's something to look at. I don't know if you've. I'm sure, given your prolific study, that you've already looked at that, but I actually like doing that a lot. And depending on the context of the signal, you can actually fade. So this is a trading range signal which fails. And so if you actually take the sell at a measured move, then you can get back out, break even, and where all of those traders who were trading this trading range bar got out break even. So there's some really interesting opportunities by extending these principles, these price action principles that Carpet's referring to, across all time frames. They're equally applicable at the level of the bar and on the level of the daily, the daily chart. And so this is more Carpet what you were talking about. Sorry, I don't want to hijack your question or your statement rather. Basically, it's really we'll say this is your range. It does reduce position size. So if you're swing trading, it it really depends a lot on context whether or not you take the initial position. Um, one of the things that I find with a more of a scalping style is that you get those you get to those measured moves more often than not. So I rarely take this sell. Usually I would, fade the sell with the expectation that you'll get the measured move, and then you can sell above the measured move for a retest of that level. Because when the trading range signal on the scalping trading range signal has a high probability of failing, or a higher probability of failing, and it does, then it'll also usually get retested. Like this one failed. Uh, Depending on how you traded it, it failed. But then that got retested. This one succeeded, so don't have to worry about that one. That one never failed. That one never failed. None of those failed. So um, this one arguably did, but not usually good practice to trade that late in the day anyway. So yeah, so here is your previous major swing lows, buying here with the expectation that this is going to be a trading range day. It's actually similar to what we were talking about earlier with this climactic, the sell climax into previous day support, major swing levels. Um, do you like fading second leg traps, climactic bars in trading ranges like these? Uh, no real bull climaxes here. They take some getting used to, but those are great positions too. But again, it requires a bit of study to understand the calibrated expectations for such a signal. So, kind of getting back to the reason for this stream, when thinking about developing a system, it's either going to be yes, yeah, and the follow through can be surprisingly violent at times. Um, so yeah, let me see. Um, do you have a good example? Oh, yeah, last Wednesday. This is a good one. We had this outside bar breakout and follow through. It's a good sell. There were a lot of them this day. Um, so this was a difficult day because it was an expanding triangle trading range day. Those can be funky. Um, these are all of these climactic bars. So let's go back up. So I'm not gonna keep you all forever tonight. Um, but the reason why I wanted to start the Sunday with this kind of perspective on systematic trading and thinking in terms of systems is because when you my preference is to first identify market cycle, because obviously that determines what system you deploy. If you believe that you are in a trading range, then you're not taking any trend resumption trades, right? Not until you get a breakout. And so only after the breakout can you begin taking trend resumption trades. But then there are even caveats to that. Like if you have a sell climax testing previous day support, and that often happens. Same thing, buy climax testing resistance. So first identifying market cycle, and then what part of the market cycle. So after the breakout, do we believe at this point that this is restarting the market cycle and we're in a breakout and you know at some point going to start a channel? Well, we got the confirmation, probably here. This I'm sure that traders didn't like to see that this was all happening right at the EMA, but by the time you get bar 29, this failed breakout of the outside bar, uh, close above bad buy signal bar. Bad buy signal bars that get follow through are the hallmark of trading ranges, because it again forces people to buy high, which is what happens in trading ranges. And so after the bad buy signal bar gets breakout and follow through, the odds of this being a trading range also increases. And so we go from wanting to buy a pullback here to fading highs of what we believe will be the trading range and scaling in higher. Whereas here, when the bear breakout. I mean, this is if I turn on a variation of this indicator. Let me just do this real quick. So this is an outside bar breakout, and this is just a bear breakout. So this other indicator that I wrote, the other one was Ali's. This is the one that I usually use when I trade. This is the first bear breakout bar, and it's a breakout at support that is followed by an inside bar, so no follow through. So here, the expectation for breakout and follow through that gets a deep pullback is again trading range. So when you get a pullback, and this is again kind of similar to what Carpet was saying, pull back to previous day support. Well, same principle. Once you've had confirmed support and you know that sellers are trapped and they're going to be scaling out, selling higher and trying to scale out, you know that you're developing some form of trading range. 15 is not a breakout bar for this code because it has too much overlap with the previous bar. So it's saying that it's part of a channel phase, not a breakout and start of a new market cycle. So that's why. So this code is looking at whether or not uh, what the probability is, because the goal of this is it's a scalping paint bar, and so it tells you what the probability is for the next bar or two, not whether or not this is literally just a breakout and close below with a strong close or bull or bear close. So going back to the idea of the breakout or the trend resumption or mean reversion, I know everyone knows this, but when you get your pullbacks in bull channels, the mean reversion is a trend resumption trade. So using limit orders, this is where limit order traders are betting on the mean reversion as a trend resumption entry. So here you are, mean reversion. Selling above here is mean reversion, buying below and buying all of these highs, which got breakouts. So mark your inside bar highs. This is true throughout any trading range. And then once the trading range fails, and in this case, you get a bull breakout, then all of those other breakout points become your pullback locations. And so for me, I prefer to trade with limit orders. I know they make some folks kind of nervous. So it's definitely something to get used to. And I like to practice in market replay. It's my preferred place to do my practice. But understanding where you are in the market cycle is really primary. And so, going back and rewatching Al's videos on market cycles is probably, in my opinion, one of the highest value exercises. Is just rewatching those until you can kind of replay them in your sleep. Because if you can, at a glance, understand the probability of the market cycle that you're in, then you know which system to deploy. And if it's a trend resumption system that is like here, you had two legs up, wedge, pullback, and breakout. After this breakout and follow through, this is a bad sell. So anytime you have a bad sell after a low probability breakout of a wedge, then it's a good buy. Right? And so understanding that context in terms of the market cycle allows you to deploy the proper system. And then all of the downstream effects of that, which are proper calibrated expectations, which determine trade management. So before the week started, I thought it would be useful to just discuss these kind of first principles so that as we go into the week, everyone has top of mind the market cycle they're in and how that defines the type of system they should deploy and how they can start thinking about the calibrated expectations for actually deploying the system, what they should reasonably expect after the first, second, third bar after they've entered, you know, um, after the signal has been generated, how many bars it takes to get their order filled. if they're trading with stop or limit orders, if it's a stop or limit order entry. There's so many decisions which uh, come up as soon as the signal gets generated. What's generating the signal? There's there's so many questions to answer, and if you can answer all of those quickly and you understand the market cycle you're in, then and you also you need to have obviously your trend resumption system and your mean reversion system. But if both of those are in place, then you can relatively quickly begin to deploy the right systems and properly manage your trades. So before we leave for the day, is a bad sell because the bar starting the bear trend is somewhat a doji. No, it's a bad sell because we had a breakout and follow through above a wedge, and so it's a tight channel here. But it was this start of the tight channel, this here, and then the second leg in the tight channel was actually, I guess, the third leg in the tight channel is breaking out above this nested wedges. So you have, let me just draw the nested wedges. Oh, sorry, missed that one. So this nested wedge, or that wedge is nested with this nested wedge. And then this is the one. So you would expect here, as this comes back up, the expectation is this fails here. But your breakout above, and then your strong sell, not a sell signal bar, but your strong bear bar here, strong bear close fails. So that is actually a stronger buy because of the context surrounding where it actually generated. That's not something that you typically would begin to take, when you first start developing a trend resumption system, because that's more based on market cycle, understanding that the low probability event is happening, which means that when it does, the market will move farther and faster than it would if it were doing the high probability thing, right? Which is correcting and getting two legs down to retest the leg two of the wedge. So if we don't have any other questions before I wrap up, I'll leave you all with that. The idea being that there's really only, well, there's three decisions we all know. It's buy, sell, do nothing. And whether, which one of those things we do is first determined by the market cycle we believe we're in. And then second, whether we have a system we can deploy to take advantage of that market cycle. And I think that's really key, because just understanding the market cycle doesn't mean you can trade it. Like, knowing that it's a small pullback trend, or knowing that it's most likely a small pullback trend, doesn't mean you're prepared to take advantage of it. Right? It could be one of those things that you're just not really comfortable trading, and it's incredibly important to know that trading small pullback trends doesn't make you happy, and that you can just turn off the computer and walk away if that's happening, because it's not going to be something that is good for you, or you don't have a system yet that can help you manage those days profitably. But if you also know that, then it's something you can work towards. So every piece of information you find out about yourself and about the market helps you better manage the systems that you develop. And if you have any questions about any of these first principles, you can drop them on the video once it's posted, and I'll be happy to answer them in the stream tomorrow. I'll be jumping on tomorrow evening to just discuss the trading day and how different systems could have been deployed. I can talk about, if it's helpful for folks, I can talk about the signals that my scalping system generates. We can use these as a template, or if other folks want to share the trades that their systems are generating, we can discuss those. But the idea is that they'll be short, calls, 15, 20 minutes, and we can just quickly run through some ideas and uh, how and with the idea that the most important thing is calibrated expectations. So once the signal generates, what should I expect 1, 2, 3, 4, 5 bars into either the trade that I've entered or into the setup being live? That is probably the most useful thing to understand about a system as you're developing it. So maybe we can end there and pick back up tomorrow evening with a discussion of the calibrated, and we'll actually start with my system, the calibrated expectations for each of the signals it generates during the trading day, and how I manage them. So uh, tomorrow, I actually probably won't be trading much in the morning. So most of my commentary will be starting around noon, the noon to 2, noon to 3. But in any case, we'll catch up tomorrow and have a great evening. Trade safe in the morning for those who will be trading the open. And talk to you then. Have a great night.